Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. Brent Wilsey is the president of Wilsey Asset Management. He joins us again with his weekly commentary today, talking about some very risky decisions that investors are making. I thought rule number one was avoid risk. What are we doing?
Great statement there. And that's the thing, that the craziness on Wall Street right now is just amazing me. And what is going on, and it's not all sectors in the market. I want to make sure that people understand it's not the whole market is terrible, but there's certain areas that are so inflated, so risky, it's going crazy. Even this morning, NVIDIA, the AI chip maker, they came out that their market capitalization, the total value of the company, $5 trillion. Now, we know that's a lot of money, but compare it to the Dow Jones Industrial Average, which is 30 big US companies. The total value of that is a little over 20 trillion. So you're saying one company is worth 25% of those big 30 companies? It's just craziness that's going on. And I always try to give people, because I've been worried for a while, I give people examples of what to think about to really understand the fundamentals that things are expensive. Be careful.
Right. But this is the risk that we run, is buying into these hot stocks. We've talked about it before, getting enamored by the next big shiny thing, chasing that.
Yeah, and you know, I'm no fan of crypto. I mean, crypto, I can't give a value to it. Congratulations, people made money on it. But crypto, here in the US, you can get it. You can leverage it a little bit, leverage using debt to buy it, a little bit. But what's going on around the world, because crypto is a world currency, is even crazier. There's what they call these hyperlink decentralized exchanges, and one is called hyperlink liquid. They will loan up to 40 times Bitcoin. So in other words, you have $1,000 of Bitcoin, you can borrow to buy $40,000 of it.
Wow, so you're way over leveraged.
Way over leveraged.
Yeah.
20 times on Ether. And keep in mind, the US, the banks were having a real hard time, almost failed in 2008, because they were about 12 to 14 times leverage. And that's not it. I mean, even Binance, which is a well-known company in crypto, they will loan up to 100 times some of these. And what's going to happen when that leverage breaks down? Because it's great when things are going up. You make tons of money, like, whoa, everything is perfect. But when things start breaking down, you start selling, well, now you've got to sell everything. And that's when you have this cascade, this avalanche, what's going to fall dramatically because of leverage. Leverage is very dangerous, and people don't understand that.
Here's another thing that many people don't understand. Meme stocks. What are meme stocks? Why are they so popular? What's the risk?
Well, they're popular because they're gambling, and people can make a lot of money with it, and they see, oh, this is great. You know, Beyond Meat, they were up to, I think, at like $170, $200 a few years ago. Well, on Monday, they were $1 a share. Well, all of a sudden, became a meme stock. Monday, they were up, what was it, 128%. Tuesday, they were up 146%. Wednesday.
So huge fluctuation.
Huge. Wednesday, another three-digit gain. They did end up that day up 1%. So they went from Monday about $1 to up to $7. Now, I checked it this morning. Today, it was at $1.83. I mean, these are the craziness, and then people wonder why they lose money, because this is strictly pure gambling. I think you have better odds in Las Vegas than you do playing with meme stocks. I mean,
you
it's just
really are
crazy.
rolling the dice. You know,
Yeah.
literally, right?
Yeah.
Okay. So let's talk about nuclear energy. There's a lot of attention that's being paid to that too. Also risky? Also
risky. I mean, because again, everybody knows that the big demand for energy is going to be there.
Yeah.
And there's a company called Okla that came out, and they were up 500% so far in 2025. Market cap of $20 billion. And Financial Times, which is a very respected publication, came out saying, wait a minute, this company has no revenues, no sales. It has no license to operate reactors, and also no pending contracts, not no contracts, no pending contracts to provide energy. This company, again, was up 500%. So these are the crazy things that you have going on. You just got to be very careful and be aware. There's a lot of risk out there. Be careful.
Rule number one, avoid the risk.
Avoid the risk.
Thanks, Brent. Appreciate it.
You're welcome.
More information online, smartinvesting2000.com is Brent's site. The preceding portion of Good Business San Diego, sponsored by Wilsey Asset Management. We'll be right back.